Hey, what's up, everyone? It's your boy, that dude, and I've been getting a lot of questions as to how do I draw my zones. And I think this is a subject where there are so many videos out there that I personally have learned from Carmine Rosado, Lunar Aces, great people too, but um, everyone's been asking me specifically, how do I personally draw my zones? And I have a little bit different of a style, but I'm gonna try to break it down the best I can for you guys. So I like seeing what's going on the smaller time frames. I personally really like fresh zones, and what a fresh zone is basically a place where the freshest price action would be. And essentially, you're looking for an accumulation followed by a big move. Um, like this right here, this is a zone. We're looking at the time, the 5 minute time frame, so it makes it a little bit harder to see. So for most people, as you're getting started, your easiest time frames to draw zones, especially fresh zones, would probably be the 15 or the 30 minute. So you see what looks like to be kind of just like consolidation, or some people might call this chop. But essentially, this is just a consolidation or a flag or whatever you want to call it. But let's look at it at 15 minutes. So 15 minutes, you're seeing it's tightening it up. It's starting to look a little bit more constructive. You drop it down to a 30 minute. Okay, now we're seeing it's literally just a flag. So how do you draw this zone? Well, for a supply zone, which would be an area where a sell-off happened, or a demand zone where there was buyers present and aggressive buying happening out of it, um, we'll start with the supply. So supply, you start at the top of the wick to the bottom of the body of that kind of consolidation area. The other thing that can really help you with that is you can look at previous price history to solidify that zone. But let's just stick with this. I'm kind of getting rambly already. So we see that over here, the zone is respected. This is this big sell-off or this rejection of there's a big trend line here, but also this 400 psych level. It's been a pretty big spot, but you can see from this day, we rejected right here. If you wanted to, you could go from this. That would be, I mean, this is a pretty large zone. But if you were to take this, obviously you can see we started the day in it, rejected the top of it. You don't necessarily need to draw your that big, but what you'll see is you start dropping into bigger time frames, and it will still be respecting that area. So, yep, see, look, it's the same thing. The 30 minute was the same as the hour, essentially. Um, so let's drop back into the. So for demand, you want to grab the bottom of the wick to so for here it's kind of interesting because on the smaller time frame, this 30 minute, you don't really see like that much. Like you see like big wick candles, but generally, um, for me, I would grab about this right here. And as you can see, the price respected it right here. The price respected it right here. And once again, even this crazy weird candle that happened after hours, um, it respected it again. And we'll drop back, we'll go into the 1 hour once again. And it's not exact. Like, so a lot of people, how they would draw their zone, um, they would be trying to grab this right here. They would grab the low of that wick to the body of that candle. But then if you start looking at like higher time frames, such as like let's say 4 hour, then you start seeing, oh well, this is way crazier than this zone. So like um, so if you were doing the 4 hour, you would be grabbing this bottom wick to the top of that body. So that's where you have to change through your time frames to see what exactly it's looking like. See, that's you grab way more price action and look at that. Like we literally opened on top of it, wicked down in it, respected it right away. I mean, if you were playing this yesterday, and you were looking at the higher time frames, you would be pretty convicted on holding this thing all day long. I mean, you got the sell off from here. This is a supply zone, but a supply and demand is really just means that there was aggressive buying or selling in that area. For supply, technically, it's selling, but what happens is that institutional buy or sell orders are sitting there, and that's generally signaling that this is a price of congestion or a place where there's a lot of fight between buyers and sellers. Obviously, this one was sellers one, but that doesn't mean that people weren't trying to place orders right here. So that's kind of an interesting thing about zones. So now that we kind of have some of the basics going on, um, let's look at some things that are kind of different about the way that I like looking at zones. So um, let's just drop down to a 30 because it's really easy to see um, kind of the form of it, form of all of the consolidation patterns. So for me, this zone is good. Yeah, this looks sweet. I mean, I would actually tighten this up personally. I would do from the top of this wick down to the body of that green candle, and that would be my zone. But here's what I really like. So I like seeing, okay, like, yes, this was a fresh price action. This literally just happened the day before. And as you see, we respected that supply zone beautifully. But here's like the things that I really like to see when I'm drawing zones. Let's put this zone on as well. Um, so let's just do that. And I'm gonna go in here and stretch this thing out. Let's see, let's take it back to December of 2022 or 20. Okay, and let's do the same to this. Okay, so here's what I like to do. So once I have my zone there, I like to go into the 4 hour with roughly about half a year to a year of time, could be bigger, smaller. I mean, I just like to see a decent amount of historical price action. Um, and then what I'm looking for is I'm seeing how obviously this is a fresh zone that was just formed, but my question is how did all previous price action respond to this area? Is this an area that we just move right through, or is this an area that gets respected and there's either massive buying or selling or what you would call a pivot, like key level, a pivot, whatever you want to call it. I mean, really, everyone's got their terminology for saying the same exact thing. You're essentially looking for like let's look this bottom spot right here. Look at this. We every time we tried to get past this spot, we rejected. When we sold off, we created a little consolidation flag right here and respected this before we went off. Look at this. Literally, this is a gigantic rocket. This was probably, I think this had to be some sort of data driven, or it was just a crazy rally day, but I almost guarantee there was data on this day. But this candle, it went all the way up to the zone, came back, paused before it went through it. Look at this, barely went over, rejection. Consolidation, dip down, consolidated right in this level, rejection. I mean, so this is symboling a key pivot. Like this is very important on the chart. Let's look at this one. It's not quite as crazy as the other one, but you can see that every time that it hits this zone, it's pretty aggressively moving away from it. Like you get try to dump in consolidation right here, dumps down. Can't break this level, can't break this level. It finally breaks this level, rockets. So what you're seeing is you're seeing that buyers and sellers are very aggressive in this area. And when you get a break of this pivot, you're seeing aggressive moves. And so that gives me a lot of insight into how important the zone is. And like I said, I like playing fresh zones. But what makes me think like, oh, there could be a possible rejection or there could be a aggressive move if it breaks. I'm gonna be looking at that. So like let's drop down to the smaller time frames again. Let's see, 30. So when I'm looking at zones, I am drawing fresh zones. So I'm saying like, okay, so it looks like we had a sell-off right here, and I'm going to have that zone there. And let's see here. Here is a zone. We see this. We came up here, rejected this, had a sell off. Um, Came up here, consolidated in it. This spot ripped out of this spot, consolidated right here. Look at this. We have consolidation, rejection, aggressive move. So come in here, put that zone in. So when I'm say I'm trading this day on a smaller time frame, I generally like using like a 5 or a 10 minute chart. Um, we'll zoom in here. So I'm looking at these zones and I'm saying, oh yeah, here we have obvious, you know, price reaction. Um, but the thing is this zone really, really important on the overall chart, like on the larger time frame? Is this a large pivot? You know, so I might be looking to see like, okay, how are we going to respect these zones? These are like, important. But what's the most important for me is I'm thinking about this zone. I'm thinking about this zone because these are the ones that we just looked at, and we understood that we have extremely aggressive buying and selling anytime it hits these areas. And then when I'm looking at these, I'm like, okay, these are fresh zones. Obviously, price is respecting the zone, but then when you go out again, here's the zone. Is it as important? And look, it actually is very important. Right here, you have aggressive buying and selling. Let me put a line through this just to give it. So here's the new zones that I just put in. And this doesn't always happen. You're seeing that each one of these fresh zones that were just created are actually extremely powerful spots on the chart. And this is kind of what I'm trying to like get at. I'm rambling a little bit, but I'm just trying to break down like what I'm looking at, like what is really important to me when I'm trading. Like I really like fresh zones, but when I'm drawing my fresh zones, I'm obviously just looking for price reaction in that zone. But the other thing that's solidifying that for me is like, okay, do we see like, is this a key pivot on the chart? And incredibly enough, all of these new fresh zones are insanely big on the chart. Like this one, big spot. These two are incredibly strong. Like, I mean, honestly, this middle pivot zone, this 390, 394 level, this is huge level. Every time we get into it, I mean, you could essentially, if you wanted to be a crazy ass and you were like trying to like, I don't know, trade on swing trade for a month, you would have this whole thing drawn out and be like, okay, if I see price coming into this, I'm going to enter the trade. Or like say you're swing trading and you were looking at uh, okay, anytime the price comes into this zone, I'm going to uh, take a short position because every time I see massive rejections, I mean, even this rally that we had, we only got a couple points above it. Pretty much had like a couple days up here and sold off aggressively. What happened? We came back into the zone, sold off aggressively, came back into the zone, sold off aggressively. So hopefully I'm not like going too crazy for this video, but I'm just trying to really emphasize like what I'm looking at and why I'm looking at it. So let's drop down into the smaller time frames again, just so um, I can kind of show you what I'm looking for in the daily. Hopefully this video is not going too on. I'm not really keeping track of time, but so with the actual zones, how I'm playing them is I'm waiting to see how they react. So let's just zoom in here. Okay, so just because it's hitting the zone doesn't mean that, like, say it's coming in here. This doesn't mean that you should just short or that you should go long. Like, see, you come up in here, you get a little wick, rejection, comes down. Well, I'm not entering the zone right here just off of like what I'm seeing in the first candles that are touching it. What I'm looking at is I'm looking at the volume. I'm seeing, okay, what's the volume saying about this price action? Yeah, okay, it's wicking down, but overall, this sell volume on these two sell candles are actually reduced. There's less sell volume, and this is early in the market, so like volume should be pretty strong um, first thing in the morning. So this is actually relatively low volume right here. I'm looking at this and I'm like, there's a rejection, but it's not that aggressive. Like they're not aggressively selling it. Also, this big candle, this little wick right here is the sell pressure. Those are the sellers. So that means that all of this candle was buying. So the volume buying, relatively low or weak selling. Um, these are holding and respecting this zone. So right off the back, I'm like looking, I'm thinking, this looks like they could continue keep buying this thing up. They pull it back here. We get one extremely high volume candle, but what is this? Well, this is a double wicked candle. That means that buyers and sellers are aggressively fighting for that spot. So this is essentially a candle that is half buying, half selling. The next candles that you see here are lowering volume. So the selling, once again, lowers. You get a stall out here. All of a sudden, super low volume. Why is there reducing volume right here? This is so interesting. They couldn't sell this off. Super low volume. The sell volume, once again, really low. We get a gigantic stick comparably to these right here. Aggressive buying out of this. I wouldn't be looking to buy in this area whatsoever. What I like is this little consolidation right here on top of my zone. I'm getting in this 10 out of 10 times right here. Um, it rips up, comes back down. This was happened to be news, but if you were using your premium, you most likely would have got stopped out. But this move right here to here, if you're using zero dates, which that's what I trade, that would be probably 100% trade. Let's see here. Yeah, that's over $1 move. So you'd probably be 80, 100% on this trade. Um, if you were using longer dated um, options, or you have sold most of your position right here and you were holding, I still wouldn't be selling right here because it's coming back down here, respecting it. Look at this sell. This sell candle, what's the volume telling you? There's no volume behind that. So that's a flag right there. That's a big red flag in your face. Like you want to get in on this sell, you're like, oh, it's selling off. Well, look at the volume. There's no volume. So that is market makers trying to steal your money, essentially. And this was news driven. So, like, anytime there's news driven, you know market makers are trying to mess with you. Instantly holds this level. I'm getting in this 10 out of 10 times. Look, increasing volume, we rocket out of it. Get through this level. There's really the only high volume here is this doji that happened, and which just means indecision or a fight, but they can't push it down lower. Every time it's wicking up, coming in with pretty like weak volume. And then as soon as it starts pushing again, high volume accumulation coming up out of this zone. Right here. I actually took this trade right here. They came back down, they pushed it down. What did they push it down with? Low volume once again. It's that simple. Low volume. They couldn't push it down. They held this area, ripped this like crazy. I mean, contracts at the end of the day, I believe they went about 2,000% from right here to right here. It was absolutely insane. I mean, those are zero dates, but even if you're trading like next day to expiration or like next day would probably be like, I don't know, not 393, 396. I mean, this would still, next day expiration would still be probably about 200, 250%. So that's how I use the my zones, how I draw them, how I actually use them in intraday, and I'm pretty much going to wrap the video up here because I feel like it's going on quite long. But if you guys have any more questions, I'm happy to break them down or do another video on something very specific or let me know. But you guys have a good one and take it easy.